Welcome into the blockchain basement. Today, we are joined by one of the greatest voices for crypto and all of the awesome things happening within the altcoin sector for years on end, Lark Davis. Lark Davis, how the heck are you doing out there? Are you still in New Zealand?
Still in New Zealand right now, though we're probably moving to Dubai pretty soon for a
Really?
variety of reasons.
Okay.
Not
Okay.
just taxes, well, that's pretty cool too. But
Yeah.
we need an adventure in life, so we're gonna take off and go to Dubai for a little while.
Man, that's an experience right there. Big testament to how crypto's changing lives. You know what I mean? Heading out to Dubai. Now, really, Lark, I follow you on X. I've followed you for years, and something that you've taught me and many other people in this space is patience is key. And essentially, what I've seen across the board is people new to the space, or even some OGs and TradFi wealth managers. They're asking across the board: is the bull market over? Did we experience the top for Bitcoin when it hit $74,000 and all of those AI tokens went to the absolute moon in March of 2024? Do you think the bull market's over right now and we've got this early top situation, or is there still runway for crypto at large into 2025?
Well, if that was the best Bitcoin could do for a bull market, then I don't know, man. That's just lame beyond belief. Pathetic. You drunk
Yes.
Bitcoin, go home. But
Yes.
realistically, I don't think that's the case. Look, we had an early top because of a very specific event, right? And I thought we'd move a bit faster than we did, but this accumulation zone we've been in, this downward trending market, this wild price action's been really testing a lot of investors. But essentially, what we had, Bitcoin ETFs came. They put in this new sort of wind in the sails of the market earlier than should have happened. And Bitcoin ETFs been wildly successful, in spite of the fact the price is down. We've seen $17 billion plus flow into Bitcoin ETF products. But we got that early high before the Bitcoin halving, which is earlier in the cycle than we've ever had a high happen. So essentially, that happened. It was a bit of a mirage, if you will. And then we kind of got back on track to how a cycle would probably normally play out. So we have the Bitcoin halving that happened. It's been 4 months now. And then what do we usually see happen in the markets? It usually takes around 6 months before price really starts catching up to the new realities of the supply and demand mechanics for the market. And demand 100% has been there. We've seen huge accumulation, not just from ETFs, but from new companies entering, whales, millionaires, billionaires, all this kind of stuff. Everyone's coming for Bitcoin. People have been very excited about it, despite the fact the price has gone down. I think the best days of this market cycle are still ahead of us. We're only 4 months post Bitcoin halving, and as long as there's not some kind of giant mega recession imminently coming in the United States, then markets should be pretty good. We have all these different events that are coming up, whether it be FTX investors getting $13 billion in cash back, rumors that China's going to unban crypto, the fact that crypto has become such a major political issue in the United States. All these things are positive for the industry, right?
Absolutely.
So
You
happening out
bring
there.
some great points up there. Like last cycle, 2020, we had essentially the narrative that the economy was going to come to an absolute standstill, and yes, we had airdrops of funny money in the United States, which we're paying the price for in inflation right now. But I do see some extra stresses on the banking infrastructure, which are, in my opinion, making the Federal Reserve have to act a little bit weaker than they want to at the moment being. And a lot of that, coincidentally enough, are securities within the commercial real estate market. Commercial real estate is falling off a cliff here in the United States in dense city centers. And those are securities. It's funny that Gary Gensler spends all his time complaining about crypto as a security while they're ignoring the elephant in the room, which is a $800 billion level of unrealized losses for these banks currently sitting right now. And so that brings me to my question, Kit. Even if we see these stresses on the macro, on these banks across America, can crypto still have a bull market in that type of situation?
Absolutely. It just depends on how bad the macro scene gets, right? If macro, particularly, I think we need to look at the stock markets, right? If the stock markets really start falling to pieces, then there's no situation where crypto is really going to do great. And if the S&P 500 drops 30%, don't expect Bitcoin to go to the moon, guys. Let's just be realistic here. But when it comes to like the property markets and their impact and the exposure to banks, starts becoming, I think, a bit of an issue that, to an extent, as long as that doesn't bleed over into the stock market significantly, not that big of a deal. And the Fed has shown itself to always be the lender of last resort. And we've seen with these mortgage-backed securities and stuff like that, they opened up unprecedented lending lines to these banks to stop the bank collapses from happening. But at the end of the day, JP Morgan's not going to collapse. Goldman Sachs isn't going to collapse. They're just going to eat the smaller banks, as they've always continued to do. They're the top predators, and they have more, but they are too big to fail. And the government knows this, they know this, so they can act as recklessly as they want. It doesn't really matter what they do. But yeah, it's been wild to see some of these prices where you have these office buildings going for like 75% losses and stuff like, hey, these office buildings out here trading like shit coins, man. What's going on?
Yes, it's a little sketchy when you're looking at it for what it truly is. Selling for 10 cents on the dollar in
Mhm.
downtown San Francisco, there's an issue there. And you bring up something that I also wanted to highlight within the potential for a stock market bubble. What is your opinion on what could actually institute a stock market bubble? Is it Nvidia falling under investigation with the SEC and being considered overvalued? Would it be that is, to my opinion, the biggest and scariest elephant in the room is this Nvidia overvaluation coming to light in 2025. And it is my opinion that in general, we're following this stagflationary pattern from the 70s to 80s. You know, we have a year and a half to 2 years of Federal Reserve weakness if we continue to follow that same pattern. Do you worry about Nvidia dragging the entire market down into the depths of hell come 2026 when those valuations come out?
Come 2026, that's a long way away from now. And it's interesting how much correlation we get with 2026 being potentially a quite bad year in markets, right? Where basically sell in 2025 and go away becomes the mantra for everybody to repeat to themselves. Whether it's Nvidia, that's the spark, or something else. It's not like AI is going away. It's not like the need for graphics cards are going away or any of this stuff. It's only going to get massively bigger as time goes by. Now, can we have specific bubbles? Of course we can. And even what was I think Stanley Druckenmiller, where he came out saying, I think he exited his or most of, if not all of his Nvidia position after, of course, massive gains, but saying that maybe AI is now getting into a bit of a bubble and stuff like this. But look, all the AI companies are going to keep going massively up. But it's people overestimate what's going to happen in the short term with AI and underestimate what's going to happen over the next 5-10 years with AI. So that's something to keep in mind. But what's interesting, 2026. So if you think about the 4-year cycle for Bitcoin, essentially that would say that there's going to be a top, whether that comes in April, we get an early top, or it comes sort of more 4-year standard-ish October, November 2025, the top will come. You'll need to get out of the markets, especially with your altcoins. If you want to hold your Bitcoin multi-cycle, that's fine. Your altcoins, they're all going to go down 99%, guys. So, you need to run away, essentially, if you want to keep your profits and not suffer those horrific losses. So there's that. There's the potential of a U.S. recession getting more increased as we get towards 2026. And there's also, you ever heard about the better rule? You ever hear
No,
about this? So the
no, no,
better
no.
rule. So this guy was pretty sure he was a pig farmer back in like the late 1800s. And so he made this chart, and basically he charted out the rise and fall of markets based on the demand for like pork and stuff like that. I'm paraphrasing, right? That's a little more complicated than that. But what's quite interesting is you go back and he made predictions out for a very, very long time into the future. And what's interesting, you go back and you look at some of how things have played out. You're like, holy cow, this has been wildly accurate considering how that this dude made this 100 years ago, right? And so, according to that, by the way, 2026 will be a bad year for markets. So 2025 is the year to sell. Get the heck out and you know.
Wow. Well, and it lines up with also the liquidity patterns for the US elections. It seems like we experienced this great upswing in liquidity right before the elections. They
Mhm.
send everyone to the polls, being able to sell them all this hope, and the economy starts kicking over again. And it just feels like this rinse and repeat pattern. So, I mean, this better rule sounds like even more confluence to that. Me personally, I'm targeting to start laddering out of the market in total beginning of May of 2025 and be completely out by October.